Hey, this is René, welcome back to this video, and this time we will have a look at the question, should you ask during high impact news events? So in this video we will have a look at events like the non-farm payrolls event, and by the end of this video you will know exactly if you should trade on these days or not and where the pros and cons are. I will of course have a specific look at automated trading as always on this channel, because this is what this channel is about, and also what trading should be about for you if you take this seriously. So let's have a look at one example first to start this off. So you can see here, this is the backtest using the USD Japanese yen chart. I'm testing on high quality data, and I'm using the range breakout expert advisor that I use quite often already on the channel, but this is perfect. This is a perfect strategy to really test this, because it is a breakout strategy, and usually you want to trade breakout strategies, or most strategies that are based on high impact news are working with breakout strategies. So what I want to do is I want to get to the point where the non-farm payrolls are published. And this is still some hours away, and then we will see a dramatic increase in volatility. Okay, this was a little bit quick, but let's have a look at this. So you can see here, this was the time when the non-farm payrolls event was, or when the numbers were published, like 15:30, right? And we already saw really huge spikes. And what we especially saw is, wait, let me get this even a little bit bigger on the screen. So you can see we saw this crazy spike here. So the high was at 0.903, which is up here, and you can see we got this buy position immediately with the news, or with the key figures being published. So we got this buy trade, then the market spiked down and hit the stop loss and entered the sell trade immediately, and now the sell trade is also negative. And this is a typical example for high impact news. You just see a lot of spikes in every direction, because the market is a little bit unsure, is trying to find the next direction. There are a lot of quick trades going on because people try to benefit from these news events, like on a short-term basis. Also, there are of course high frequency trades in the background, like algorithms, who also have their impact on the market. And the question is, what happens if you trade these days every single month, for example? So if I fast forward, you can see the second trade this day, the short trade, would have been profitable, but overall I think this day was still negative because of the losing buy trade. Also, there are some more factors like increased slippage that you can suffer from. For example, here we got, I think there was barely any slippage, but usually you get, or you can get, a lot of slippage. So first of all, what are the non-farm payrolls? The non-farm payrolls is a news event, or a key figure, a number that is released usually on the first Friday every single month. And it is from the United States, and it's the number of, like, the change of, I think it's the number of new jobs generated in the private sector, so outside of farming, I guess. That's where the name comes from. And this is a really important figure and highly anticipated always from the market. And there's always a forecast, and the real question is if the actual number is higher than the forecast or lower. And whatever happens, this will have a more or less really huge impact on the market. I mean, if the number is hit pretty spot on, usually the previous trend will continue, but sometimes if there's a big difference, this might impact the market and might also result in real, like, trend shifts. So let's get to the next trade here in this test, and you can see, which is really cool, on the 7th August, this expert advisor is not trading. On the 8th August, it's also not trading, because I added a filter, so this program will only trade during the non-farm payrolls news events. And in a second, I will also show you how I did it, like technically, in the expert advisor, in the automated trading strategy, so you can apply this to your own strategies and test if you should trade during news events or not. So let me make this a little bit smaller so the test will be faster. So 20th August, yeah, there was the trade already. Shit, I messed it up. But yeah, you can see the next trade was here beginning of September. Let me get this on the screen quickly. Yeah, 1st of September, and there was one trade here, and this one trade was probably stopped out. It's not updated here in the graph, but if we have a look at the history, it's also not updated, so I have to yeah, wait a bit. Okay, and there it is. So you can see this trade in September was a losing trade because it was stopped out, and then there was again a buy trade which generated a smaller profit than the losing trade. So this is what happens during these news events, and you can see during the actual news spike it was actually really good for the short position, but still the market turned around and then executed the stop loss and the buy position. So you can say it's really hard to predict these news events. So let's check what happens if we test this over a longer period of time. But first of all, let me show you the source code that I added to test this. So what I did, essentially I just created this nfps.mqh file, and I just picked every non-farm payrolls event or number starting from 2010. And I just added all of these events here to this file. And I did this manually. So I just copied it from a website. I did some formatting for the format. And then I just pasted it here and updated everything. So the MetaTrader 5 program is able to work with this. So I will always have the time, the forecast, the actual number, and the previous year, I think. And I store this in a structure which I call C event non-farm payroll. And you can see, yeah, we have the time, the actual, the forecast, and the previous. And then we just yeah, have this function get a non-farm payroll list. And then, yeah, this will just create a list with all the non-farm payrolls events starting from 2010. Also, I added this function, which is check non-farm payrolls day. And in this function, I'm pretty much just checking this specific list. And I just loop through this list and check if it is a non-farm payroll day to day. So this is pretty much it. And then I go to my range breakout EA recovery program here, which is like the simplified range breakout expert advisor that I use for fast backtesting. And here you can see I just call the check non-farm payrolls day function before I do any trading operations. And this is exactly this function. So this is how I implemented it. And yeah, I just put everything in this file so I can also use it in the strategy tester. And this is great because in the history, these non-farm payrolls events won't change. So for testing, this is absolutely perfect. And if you want to test your programs with the non-farm payrolls events, for example, just get the data from the internet, get a file like this and create a function like this, and then you can use it in any program. But let's get back to backtesting. So if I stop this test now, and we don't need the visual mode anymore because I think I showed you that this is indeed working, we can now go ahead and start from 2010 on all the way to 2023. So I'm testing the exact same test, same settings, same everything, and these are actually the settings that I use in my in some of my accounts right now. So I'm always trading without a target. Then I create this range from like midnight to 7:30. This is based on a GMT +2 server time of my broker, and I delete the trades at 18 o'clock and close all the open positions at 18 o'clock. I don't use any trading stops. I don't, I trade maximum 1 buy, 1 sell trade, 2 trades in total, and I don't use any filters. So that's for the settings. So let me test this quickly now from 2010 to 2023. So we can see how the non-farm payrolls actually impact this strategy. Okay, there we go. And actually, when I first saw this result, I was quite surprised because it's not looking that crispy, right? And when I thought about this, I mean, I expected a far better result because these high moves, they should result in a lot of winning or high winning trades. And I mean, we saw some of these high winning trades, like for example here in like 2012 and some years like this, but also like here, for example, but also we saw a lot of losing trades, and that's really interesting to me. Let's have a look at the backtesting results, and we can see it's barely profitable. And this is still a backtest. So if you run this in a live account, you can expect even more slippage. So it will probably not be profitable at all. So yeah, in the end, I will talk about like how I will use this information now for my trading. But first, let's have a look at the actual key figures here. So we can see, of course, entries by hours. There's a strong focus now on this 15-hour candle because new non-farm payrolls usually got released 15:30. Like if we talk about this GMT plus 2 server time. So this is why we see the strong entry like block here. Also, of course, entries by weekdays. We see most entries were on a Friday. I don't really know where this Tuesday and Thursday are coming from. Probably there are some exceptions from this rule that non-farm payrolls numbers are released on Friday. But of course, most trades released on were done on Friday. And then, yeah, what else can we see? Of course, only profits and losses on Friday. And profits and losses taken by hour is also interesting, because we can see again in this 15-hour candle we have a lot of losses, because the spikes during the non-farm payrolls news event, they stopped out just really a lot of trades. And then of course the trades that were not stopped out and that went into the profitable area, like were closed on 18 o'clock because of this strategy. But this is, yeah, these numbers are really, really interesting, and I think really important for everyone who's thinking about, should I trade during news events or not? Also, we can see the total amount of trades is 244, so it's not that much, but of course, I mean, we are testing 10 years where we can trade a maximum of 12 days per year, so 1/12 per month. So we cannot see like 1,000 or 2,000 trades here. And yeah, these are the key figures. Also, let's have a look at the data again. I'm testing with USD Japanese yen tick data 3 data here. So this is widely commonly known the best data source that you can probably get for MetaTrader 5 testing. But what happens if I now switch to another data set, like maybe USD Japanese yen coming from the broker, where you usually do not have long-term tick data. So if I test this, we will see a different outcome. Let's have a look at this. So the next test is over, and this one looks a little bit better, right? So actually looks far better, and this is something you have to be really careful with, because again, let's have a look at the difference. The only difference was that I tested on broker data now. So you can see, if you test your strategy with broker data, and it is a strategy that is highly affected by news events, the results are probably really far from reality. And yeah, you have to be really careful, because with the broker data, you usually do not see any slippage or a really, really low slippage. And yeah, there are some other factors that make this way more profitable now with this data compared to the actual tick data. Also, if we have a look here, of course, the history quality is really, really bad, and the profit factor is really, really good. The amount of trades is kind of similar, slightly different. Also, if you have a look at entries per hours, there's also a big difference, and I was just wondering why, but this is probably because for the tick data suite data, I said that like when I exported the data, that it should be adjusted to like the daylight saving time and winter time like shift. And I think for the broker data, this is not automatically applied in the history. So this is why we always also see entries at 14 o'clock. But this is not that relevant for this particular strategy, because the orders are in the market anyways a lot earlier, like also in the morning already. So it doesn't really matter if this daylight saving time shift is applied. So you can see there's a really big gap if you compare broker data to high quality data, and this is why you should really have a look at your data and really use high quality data, especially if you use or if you want to test strategies like this that really are dependent on these high volatility news events. This is a factor that I also underestimated for a long time, but now I'm really glad that I'm using this high quality data, and it gives me much more confidence and trust into the backtest. So in the end, what's my summary here? I was a little bit disappointed by the performance on the actual high quality tick data, because I thought these big moves from the news events, they are on average better for the performance than they actually are. Still, since it was not like super negative, I think I will just go with my current strategy and just trade this specific strategy, the range breakout expert advisor, during the whole year, and do not like add a news filter or turn it off during news events. Because as we saw, there were some risks, of course, but also some chances. So some days were really good, and especially the last years were on average better, or it was better to trade the non-farm payrolls than to not trade on this day. And this is why I will just continue with my current strategy. But still, this was super insightful for me personally, and I learned a lot more about these non-farm payrolls events and the impact on my strategy. And I hope you were also able to take one or two things from this video. Also, like, make sure to add something like this in your programs if you want to test how it performs during non-farm payroll events or other news events. It's easy for the NFPs because you always have a fixed date and time, and you will find lists for this in the internet. I'm not sure about other news events, if it is so easy for other news events, but this is a great way to test the stability of your strategy during news events. And make sure to use high quality data. Also, let me know in the comments what you think about it. Did you test stuff like this before, and what do you think about these tests? Will it change your view on trading NFP or high impact news days, or will you just trade throughout the whole year like I will do it in the future? So thanks for watching. Have a great time and good trades. Bye bye.